Welcome back to the Gumption Podcast. This episode is hosted by seasoned commercial banker and our head of lender partnerships, Collin Pettell. Every episode, we interview commercial real estate veterans on the cutting edge of the industry for their story, insights, and wisdom. Today, we're joined by Birmingham-based commercial lender with over 35 years of experience, Paul Rogers. Paul is the COO of Noble Bank and Trust. He's going to share his lending journey, advice to new borrowers, and outlook for commercial real estate in 2025. Enjoy the show.
Welcome, Paul. Welcome all to the Gumption Podcast. My name is Collin Pettell. I head up our lending partnerships here. And what I do is I help onboard lenders, but also help structure deals and get them to the finish line. So we're really excited to get this podcast going and start hearing from some of our lending partners out in the community. We have Paul here, Paul Rogers from Noble Bank and Trust, who's given his time with us today, and we're super excited with this. And when we were thinking about people who we wanted to have, I thought of Paul because we've always had, we worked on a couple deals together, but we've always had great conversations, and you've been in banking for a while. And so I think there's a lot of expertise that you can kind of shed and a lot of context that you can put stuff in. So we thank you for having.
Thanks, Collin. Great to be with you today.
Paul, tell us a little bit about yourself. I mean, where are you from? How'd you get into banking? Kind of your banking career, and yeah.
Okay, great. Well, I grew up in Kentucky.
Okay.
I went to college in West Tennessee and came to Alabama to work for South Trust Bank right out of college.
Yeah.
Sort of funny. I got into banking because I didn't want to be in sales, Collin. So I'm very visionary.
Yeah.
I could see I got into banking and then realized I think this might be sales.
Yeah, that's right. Yeah, that's exactly right. So did you do the retail route, or did you start kind of in a credit capacity, or?
South Trust at that point had a commercial training program. It had several training programs, but one that was commercially focused. So it did start in credit, but all with the goal of over a year or so learning to be ready to go out and start doing commercial lending. So it was a great foundation. Still benefit today from that time spent and the investment that was made just teaching us the basics about banking and loaning money to people.
Yeah.
How to try to give money to people and get it back.
That's right. And that was what, 80s?
1988.
1988. So was that right after the stock market crash, or right in there, or?
It didn't really have much impact on banking.
Yeah.
The harder part with banking was a couple of years later, 1991, the Gulf War, and there was sort of a retrenching in some commercial real estate things. Yeah. Of course, the other big thing that happened in commercial real estate was probably actually bigger than the stock market was in 86, the Tax Reform Act. Affected commercial real estate dramatically.
Really?
So I wasn't as affected by that because of what I did. I was doing more commercial industrial lending then. Oh yeah. But it certainly was a backstop that had affected commercial banks for several years till sort of the tax effects of all that worked out.
Yeah.
Affected a lot of real estate investments.
Yeah. So you South Trust, and how long did you stay there doing the credit program?
There a total of about 4 years.
Okay. Went to South Trust, and then where'd you go from there?
So I went out of banking for a few years and then came back to banking at a little small bank owned by the Elton Stevens family here in town, EBSCO people.
Yeah.
Highland Bank.
Okay.
And that started my community banking career.
Yeah.
South Trust was growing like banks in general were starting to grow, and all this consolidation that's happened in the banking industry was really beginning to take shape then.
That's right.
So I looked at the industry and really could see the separation between big banks and small banks starting to happen.
That's right.
I grew up in a family business, so I worked my dad's hardware store, farm co-op in a little small town. I grew up in a playpen back in my mom's office.
Yeah.
Really went there every day after school.
Yeah.
Over the years, that was so. Yeah. I just love working with folks who own businesses, who make investments, who make those kind of decisions. That just feels very familiar to me. And so
that's right.
It's part of why I enjoy community banking, because we get to deal with folks who are actually making decisions, what I used to call owner-managed businesses.
That's right.
Run their own business. They're in there every day. And then out of that, commercial real estate has become a very natural thing as well.
That's exactly right.
Involved with.
So when did you start coming from less of the family dynamics and more into the commercial real estate space? I mean, was Highland Bank doing a lot of that, or were y'all doing more kind of CNI, or was it kind of a mix?
We did some of both.
Okay.
But really that was the period where I started gaining more of that experience, and then just grew from there.
Yeah. So we had Highland Bank, and then where from there?
Well, a couple of other stops along the way, but then I helped start a bank here in Birmingham in the mid-2000s, and then the Great Recession hit, and we all had a lot of fun for several years.
That's right.
And so I've been at Noble now for 10, coming up on 11 years.
Yeah.
And
that's great. Yep. That's great. I mean, I heard of Noble when I was, in my banking days, and if we wanted to give you a chance to tell us a little bit about Noble. Where did it originate from? Kind of what are, just a little bit of background on it.
Sure. Noble Bank was started by a group of folks in Anniston, Alabama, in 2005, right after South Trust's merger with Wachovia became a reality, or started to become a reality. They decided to start a local bank that would be focused on the community there. So a group of folks that had been a part of the South Trust Advisory Board and the executive team in East Alabama started the bank. So we're coming up on our 20th anniversary this year. Exciting year for
congratulations.
Lived through the Great Recession. And made it. And so it's the bank's really, it's been a really fun experience for me to join and open the Birmingham market for the bank.
Sure.
For about half of the bank's existence now.
That's great.
And so we've got 6 offices here and in East Alabama.
Yeah. That's great. And now, are y'all primarily focused on any sort of industry or any type of assets that you guys like, or is it more of it's obviously a relationship bank, right? So
it is really. We're pretty diverse, and we try to be diverse because, frankly, in banking, diversity is a good thing because you avoid being all dependent on one thing. And I think we've all seen the last couple of years with Silicon Valley.
That's exactly
it's great
right.
To be a specialist in something, but if that goes well, it's great. If it goes bad, it can be really bad.
That's right.
So really, like we advise a lot of our customers, maybe not so much in commercial real estate space, but we advise our customers, be careful about being too concentrated with any one industry, customer, vendor. All those things can ultimately be risk. So for us, having some diversification is good.
That's exactly.
So we like diversification between commercial real estate and other types of customers. Even within commercial real estate, we like a variety of types of properties. So we're not all exposed to just one subcategory.
That's right. And there's been a lot of stigma around hospitality lending, and another asset class that's coming about is mobile home parks, RV parks, and a lot more banks are starting to get a little bit more comfortable with those as well. I mean, you've got your typical multifamily office, industrial, which is all great, but I feel like you've got more investors out there now that are going to alternative investment vehicles as far as the RV park, mobile home park, and hospitality. It sounds like it's starting to come back a little bit. I mean, have you all been seeing any sort of requests in that arena, or?
We are seeing some new construction requests now, which had been dead for several years since COVID. But I think hospitality just tends to be cyclical. Seen this for years. When I was a young banker at South Trust, we did a white paper internally looking at the hospitality industry, and one of the takeaways was, it's good and then it's bad.
That's right.
And then it's going to be good again. So you've got to just manage appropriately and try not to be over leveraged, because that's the real challenge in hospitality. If you get over leveraged, you really create a lot of risk for yourself.
That's exactly right.
Downturn, so.
That's exactly right. So, I mean, coming in for 2025, obviously you guys are having, planning meetings and whatnot at the bank. I mean, what are y'all seeing, maybe some tailwinds or some headwinds for the, the banking industry? I think a lot of folks are optimistic. Maybe they're a little bit more optimistic, last week than they were this week with the, inflation data. But, do you guys still remain optimistic as far as loan demand and, loan growth?
Overall, we are. Yes. Especially compared to last year. Presidential election years tend to make everybody a little anxious.
That's right.
Figure out what the outcome is going to be, who will be in charge. So definitely we've got that behind us. Now it's just, what is this going to look like going forward?
That's right.
Obviously, there's been a lot of interesting backdrop over the last 5 years. Hard to believe next month will be 5 years of COVID.
That's exactly right.
And, it's brought a lot of unexpected and unanticipated realities that have been associated with that.
That's right.
So I think we're all still trying to figure out, Collin, exactly what that looks like. But I think in general terms, I would say some good tailwinds.
That's right.
Some certainty about where we're going, who's going to be in charge. I think overall we're seeing more optimism than we felt over the last year or so. I think another positive is that the big adjustment in interest rates that we've had over the past 2 or 3 years, with the big rise and now some decrease, is getting people to feel a little more predictable and stable with that.
That's right.
The rapid change in rates creates a lot of angst.
Yeah,
right?
For the banks and the borrowers.
For both.
Yeah,
absolutely. It's, from a bank side, it's hard to manage because margins are very.
That's right.
Very variable. You know, when you're going,
and you're not underwriting at a 3% plus interest rate, right?
Absolutely.
When you're stressing.
And obviously, just from a demand standpoint, it's very hard when you go 10 or 11 years and have interest rates that are 3s and 4s, or even some residential in the 2s. Then you start talking about, hey, this is now 6s and 7s and 8s. While historically those are still very good rates.
That's exactly right.
But exactly they don't sound like it against the backdrop of the last 10 years.
That's right.
And the fact that they went up so quickly in trying to address the inflationary situation that had developed after COVID has just made it created a lot of caution and a lot of hesitation by folks. So I think now with a little bit of drop. And then the sense that, hey, we probably are where we're going to be for a while.
Yeah.
Okay, let's get back and do business.
Agreed.
You can sit and wait. But like life goes on, right?
Yeah,
and
that's
you
exactly
can wait
right.
temporarily, but at some point, you got to do some deals. You've got to do business. You got to move forward. You got to make an investment. I think even on the residential side, while we're not here really to talk about residential, but a lot of folks feel locked into that low interest rate.
That's right. The golden handcuffs, right?
Absolutely. But the realities of life, begin to settle in, whether it's a change in life circumstance,
That's exactly
kids,
right.
Getting married.
Yeah. Well, we can look at that with commercial real estate too, right? In a sense,
yes.
I mean, they got, theirs out there in 2021, 22, they had, sub 3, sub 4 rates. And then you've got these, and that's why cap rates, I think, are still, difficult to make sense right now, because you've got, owners that are sitting and they're saying, hey, you can, pay me this, or else, I'm fine. I've got a, X interest rate. So for the bank side, though, of course, that's great that it readjusts every 5 years, right? There's not a lot of, 10 or 20 year fixed rate options out there. So yeah, I think that's really interesting. And, I think, what about maybe some challenges do you think, for the banking industry? Obviously, maybe the higher interest rate, a lot of uncertainty with what's going on in the geopolitical, world out there. Anything else that y'all are kind of seeing? Well,
one other headwind one other tailwind I would suggest is, from a regulatory perspective, we certainly are optimistic that there's going to be some
deregulation,
progress in that regard, and which will be a welcome change.
Sure.
For a lot of us in a lot of ways. But as far as headwinds, I think the uncertainty that's still out there a little bit is still a question. There's a lot of adjustment being talked about out of Washington about major changes to things.
That's right.
Mandates and
some SBA stuff, I think I heard, right? Or some sort of government lending. They're changing up some of that 504 rules. And I'm not sure what those entail, but I know there are some, when with our new Trump and all of that. And I think he's kind of looking at some of those government lending agencies. So.
Well, it looks like everything is under close
that's right.
in Washington, right?
That's right.
And here in Birmingham, that's affected over the weekend the discussion about National Institutes of Health funding.
Yeah.
What does that mean for UAB, which is the largest employer in the state of Alabama?
Yeah, that's exactly right.
That has the potential to be really significant. There are a lot of people in Huntsville who are really concerned about that with some of the Space Center and some things up there. So I think there's a lot of questions right now on how some of that's going to begin to play out, what the impacts could be. The economic impacts of that obviously keep us attentive to what's going on. And even if the initial actions are some very positive things, sometimes there's unintended consequences that occur. So if you have a big deportation of folks, what does that do to the workforce? How does that affect inflationary pressure? Because certainly a reduction in workforce could see labor cost pick up, which we've been through that the last few years. We know how that cycles through, right?
That's right. That's right.
So I'm not saying that the act itself is a bad thing, or maybe it needs to be addressed, but what are the impacts that potentially could occur from that? What does that do to interest rates? What does that do to prices? So I think there's just a lot of questions about how some of this will play out.
Yeah.
Maybe there's some posturing going on to positioned certain things to go a little different directions. So maybe it settles down, or maybe there's some, really legitimate effects. Tariffs certainly.
Yeah,
the
trade wars right now.
What does that mean?
That's right, especially with China and people that are building, new buildings. I mean, I know we've seen it on our end with people that have some development going on that they had pricing 3 months ago, and now it's automatically shot up 10%. And I think I was reading an article earlier that prices are expected to increase 10, 15%. As far as new building material and whatnot.
And when you put that in the context of where we already have been on construction cost the last few years is already very elevated coming out of COVID, labor, and then the materials and how that has been impacted. The thought of another shock on cost, it makes deals hard to do, right? Because if costs go up, if interest rates are higher than they were.
It's already hard to pencil anyway. Yeah.
All those things play together at the end of the day to make deals doable or not doable. So I think it's going to be interesting to see how that affects new construction compared to movement in existing properties.
Sure.
Because you're going to see already a interest rate increase for most of those properties when they refinance.
Yeah,
or if they
exactly
sell.
Right.
So how does all that play together?
Yeah, no, that's exactly right.
It's interesting talking to economists who oftentimes feel like they have a lot of answers.
Yeah.
Many of them right now will tell you there's a lot of questions, and because there's so many variables on the table.
That's right.
I'm trying to understand how that's just going to affect day-to-day practical decisions that folks are making.
Yeah.
And all kinds of investments and business decisions I think it's a great question for this year, where we're going to be over the next 6 to 12 months.
Agreed.
Overall, I'm still optimistic, though.
Yeah, we are too. And, MBA, the Mortgage Bankers Association, they put out, they're high. They still have high levels of optimism. There's something like $1 trillion of debt that's maturing this year in commercial real estate, $450 billion of it, something like that, with, bank depository institutions. So I think there's going to be a lot of opportunity for some banks out there that have some dry powder that maybe were, staying on the sidelines a little bit, being less aggressive than some of the other banks were. And I think this can present some opportunities.
It's been very interesting to watch that conversation unfold over the last 3 years since interest rates started increasing. Yeah. First, the great anxiety, not just interest rates, but the movement out of offices and what that did to the workforce. What that did to commercial real estate values potentially, especially in office category, right? But even it impacts on some other things. And then, of course, this ongoing change that we have in how we move goods and services, goods in particular, to consumers in the country, away from physical delivery through a retail location to now more
on
direct shipping, right?
That's exactly right.
So it's changing industrial and warehouse space.
There's a whole new last mile, if you will.
Absolutely. And then it's also changed retail. So there's been some major category things going on already, and a lot of anxiety the last 2 or 3 years about what's that going to mean? How's that going to look for refinances? And then you throw in the interest rate increases. What does that do? I think it's interesting that at least so far, we're not seeing any big shock waves from that.
Yeah, I think so too.
And it feels like that some of that is more subcategory driven than it is completely across the entire economy or
That's right.
the whole space. So
That's right.
I think some of the anxiety perhaps will be more appropriately placed in particular sizes or types of situations than just everybody feeling
That's
it.
right. That's right.
Which is really a big difference. If you go back just a few years to the Great Recession, you had a real estate impact that touched almost everything.
Yeah, that's exactly right.
This feels to me, at least right now, like it has a lot more focus.
In the bigger metro cities, I think, for example,
Agreed.
With the office, York City, LA, all of those. But Birmingham and, some of the smaller MSAs out there like Birmingham, I think, haven't, like you said, seen that effect.
Right. So I think there is concern and question there. The only question maybe is some of your larger national lenders, if they start to have big impact in some of those markets, what does that do to them nationally just because they have to think about the impact financial on them? And then do we get ripple effects from that? But it really feels like right now that's going to affect more those organizations and not so much these other markets is what it feels like.
That's right.
That's
right. So one of the things I wanted to talk about, there was a very general question. Maybe one of your favorite deals that you've done or transactions that you worked on. I know that's a very loaded question because all of the deals are fun, right?
They are. I mean, I
agree. I agree.
I love just seeing different things, different ways that people.
As Ward would say, a deal junkie.
Yeah, absolutely.
That's exactly right.
It's very addicting. It really is.
Agreed.
And it's fun to see the different ways people make money, the different ways people approach deals. Which, you sort of think, well, there must be one right way to do this.
There's never one way.
A lot of ways to do things, right?
That's exactly right.
There's some basic principles to not violate.
That's right.
If you don't want to pay the price.
That's right.
But there's a lot of different ways to go about things. And so to get to watch different people find different ways to make things work. And you were talking earlier like about specialty types of properties and things that maybe generally are looked at with a bit of suspicion or concern or maybe a bad memory of a bad experience.
Yeah, that's right. That's right. Yeah.
But I think a couple of thoughts about that. One, you've got to know what you're good at and you got to know what you're not good at.
Sure.
And especially as you get off into things that have more specialty, you either got to take the time to learn those well enough to understand them or you can stay away.
Yeah.
From a lender's perspective, certainly.
Sure.
You got to be careful. At the same time, as I said earlier, we like diversification.
That's right. That's right.
You need to spend the time to learn about some different things and do some different things. So trying to find the balance between those two principles to me is one of the really important things that we do. But in talking about favorite deals, there's so many that come to mind that have just been. I mean, it's always fun to see that you're involved in something that makes an impact, makes a community different, better. I think of some areas that I've done some deals in that, began a transformation that really made a significant difference on a community.
Yeah.
That's fun.
Yeah, that's exactly
You feel like, okay, we actually made a difference. We did something
Exactly.
that wouldn't have happened maybe otherwise, and that was good. Trying to figure out how to do those sometimes is challenging.
Yeah, that's
but that challenge is part of the fun.
That's exactly
Trying
right.
to do that well.
Exactly.
One of the fun deals for me that it wasn't so fun in the middle of it, but it was it's fun at start. It was sort of a skyline affecting deal in Birmingham. We did a large condominium project here. It was a mid-rise type deal. It was complex, involved a lot of pre-sales, a lot of players involved in the deal. Everything was running smooth, and then we hit up on the Great Recession and just the very early stages of it.
Yeah.
And we had enough of it under our belt that we got most of it done, but then we still had a piece of it that was not done. And when things really started to get tight. And so we ended up taking it back over, ran it for about the last year.
Really?
But thankfully we were far enough into it that we had gotten enough done that we were able to get out of the last piece. Actually made the bank a little extra money, which was nice.
That's right.
But it didn't always feel like that was the way it was going to turn out as we went through it. So that deal had a whole lot of different elements and moments. But one of the things you learn is this is all about relationships at the end of the day.
Exactly right.
Whether it's going well and you're planning and you're building and things execute smoothly, or whether you hit a bump in the road and you have to try to figure out how to work through that. If you have good people who are committed to projects, who are committed to doing the right thing, who are willing to stay engaged and help when times are a little difficult, then you can push through most things.
That's exactly right.
As long as you've gotten into it right on the front end.
That's right.
And don't get so leveraged or
staying transparent. I think with your banker is key. I mean, when I did my banking days, I mean, I think that was one of the biggest things that I told all of our borrowers when we were extending credit is, hey, if there's something going on, the easiest way is to be transparent with us, especially when there's a lot of uncertainty like there is out here, nowadays. That's the reason that we're at a community bank, and, we can go talk with whoever we need to about that.
And that's one of the reasons I really love being in community banking, Collin, is because as a general rule, we are very responsive to folks we deal with. Flexibility is higher than it is if you're in a larger organization oftentimes. And so the ability to adjust and work with people to work through hard times and not just throw the baby out with the bathwater.
That's right.
We don't tend to work on things by categories as much as we do by people and by projects. And that, I think it gives borrowers a lot of opportunity to navigate through challenging times and not just get treated as a number, not just get treated as, hey, you're just in that category. And unfortunately, everybody in that category, we're trying to get rid of all of you.
That's right.
And so for me, that's been one of the reasons I've chose the community bank route.
Yeah.
And I've seen it play out over the years. I've seen the difference in real live situations. And so it's easy for me to say to folks, hey, you need to think about that. You may not think about that on the front end when everything's running smooth and you're just looking for the best terms.
That's right.
But if you ever have a moment where you need some flexibility and you need somebody who stay in the saddle with you when it gets hard, it's hard to overvalue that. That's when you get in those moments.
That's exactly right. I mean, I think COVID and especially the PPP process, I think that showed a lot of people where their true relationships were with their banks, especially at the, maybe bigger ones where they got, 25 basis points cheaper where they couldn't get a PPP loan if they weren't a, $1 billion customer or something like that.
Yeah, and I would say, Collin, I've been doing this long enough. I've seen that play out several different times in different ways. PPP is a great example, and our bank was hugely involved in that. We got a lot of phone calls from folks, hey, my bank has told me we're not going to be able to help you with this.
Yeah, that's right.
And, they're very panicked about that. But I've seen it play out just in other times when either the economy as a whole gets tight and you need some flexibility, you need some you just need a little bit of help for a moment.
Sure.
Or I've seen it just in individual situations. Maybe the economy is good, but just a particular project or situation comes up.
It's just not fitting somewhere.
Something's just not working as, I mean, the real world, things don't always go exactly as planned, right? And,
that's right.
And you can control some of those things, but there are some things that frankly are hard to control. The question is, how do you respond when you get in those moments? And so I've watched in those situations the ability to be able to be flexible and how it makes a legitimate difference in the outcome of the situation. So that's something that I love doing. And it really is something that I think a lot of business owners, and I've had folks tell me, hey, once you've been through that and realize the difference and what can happen, you understand the value of that.
Yeah.
It's hard to, the price of that's great.
That's exactly right.
It's really worth a lot.
That's exactly right. I mean, that's how Gumption was kind of started, right? I mean, one of our co-founders, he needed access to capital, and he didn't have as big of a, network as he needed to, and, financially, or not financially, but, for lending purposes. And he's like, man, why can't I have, exposure to these other banks where maybe I haven't called on me, or I haven't been able to get in front of them. And, that's kind of where this idea came about. And that's what we're, really excited about, is getting people in contact with banks, while there might be the best rates, but also the best people too, because that's where we come in, the human element, right? The AI and all the technology behind it is great, right? But that's where we, Matthew and I come in and say, hey, this is a great bank. They're going to get it done for you. They're going to be there for you, that type of thing. So that's how we're trying to, revolutionize the brokerage game, if you will, right? Because even when I was a banker, I understood whenever, typically if a broker was reaching out to me, the deal might not have been something that was bankable, for example. And that was the stigma that I always had. And, when I was coming on with Gumption, I told John, I was like, man, I want to change that stigma around, the brokerage industry, because, quite frankly, about 95% of our deals that we have that come onto our platform are good, solid clients that are just looking to get exposure to, different lending partners and different people on the platform, and, obviously better terms, right? But also it's doing a service for the banks as well that maybe weren't able to, get in front of that client before.
Well, I want to say Gumption is doing a great job of living up to what you just described.
Thank you.
I've, like you, as a former banker, I've had a lot of experiences over the years with loan brokers.
Yeah.
And, frankly, I got to the point where I didn't really want to talk to anybody because usually there was a reason that they were approaching a deal. So when we heard the Gumption idea, started talking to Ward, certainly appreciated the idea of technology and being able to reach a broader audience, both directions, for both developers and lenders, right? But still had that uneasiness of, is this going to just be a commodity deal? Is it going to be a disinterested, just, always the cheapest terms? And while price certainly matters, a lot of things matter. And trying to find good matches, I think, is really important. And I just have to say, you guys do a great job of helping go beyond the technology to get to the relationships and get to really help two sides figure out, okay, what is good for both of us, and how can we find a win-win through this proposition? So I think the use of technology then to enhance relationships is the magic.
Well, I think that's a great segue. So, obviously technology is shifting, banking very, dramatically, especially since when you started and, the late 80s. I mean, where do you think technology is going to put, the banking in the next, 5 or 10 years? I mean, personally, I think there's always going to be the relationship component, right? And that's, I'm old school in that sense that it's great to leverage technology, but I don't think it's ever going to fully be technology, right? I mean,
So I go back 20 or 25 years to when the internet was really kicking in. And there was a lot of talk about bricks and mortar going away. It's going to be all internet based.
Yeah.
The irony of that was the reality of that was over the next few years, it didn't play out that way.
Yeah, that's right.
Yes, there were a lot of things that moved toward technology and internet, but one of the realities was, doing that by itself, you leave a lot of it out of what needs to be added to the mix. And so what have we seen happen? Yes, there's the Amazon that's a great technology play, right? And it doesn't feel like it has a whole lot of relationship element to it. But who's done well in that environment? Walmart.
Yeah.
I mean, they still have their bricks and mortar,
but
they've added technology to that and figured out how to deliver.
That's right.
And really just become more holistic. And so I think there's going to be that play out, especially in banking, I think even more so. Banking is really hard to do as just a commodity.
That's right. That's right.
There are elements of the market you can serve. A mass consumer market, you can certainly serve that way. But the reality is, when you have any kind of unique needs or you have any kind of unique moments where you need help, that quickly shifts away from commodity, and oftentimes relationship really matters. So
exactly right.
I think if you can find the mix between great technology, great relationships.
Sure.
One of the things that we say at Noble a lot is high tech and high touch.
Yeah, that's exactly right.
It's not one or the other.
Yeah.
There's some competitors that certainly pick one or the other and just go down that path, but we think you can be good at both. And we think that's really the call, is to figure out how to do both well.
Sure.
And because we think ultimately for our customers, that gives them the best combination of all of what they need. Because let's face it, all of us want convenient, we want easy. We want
everything right at your fingertips.
So not near as many people come to the bank today as they used to.
That's right.
But interestingly, there's still a whole lot of folks that come to the bank for very qualitative kinds of interactions.
Sure.
And frankly, some of the quantity being out actually helps them have a better experience.
That's right.
And then the folks that are getting the benefit of those transactional activities that are technology based and can be done from a distance, they get the convenience of that. So it's really a win-win for both. And if you can have both when you need it, then we think that's the best fit. So I think we'll just continue to see that play out.
Sure.
Obviously, we're all talking about artificial intelligence.
That's an interesting. I'm sure we could go on for hours about that. Well, I don't know enough about it to go on that much, but it's got its great opportunities as well.
It does, and then there's all the fear about what it's going to do to take over.
Sure.
And it reminds me of a few other conversations over the years where we have this panic on the front end about this is going to just revolutionize.
Fear of the unknown.
But the fear of the unknown,
Sure.
that it's going to just be a dramatic negative. Usually those kind of things.
That's right.
Moderate.
When you understand it more.
They do.
Right?
That's right.
I mean, fully honest, I thought the same thing when it first came out. I was thinking of the Terminator, I was like, oh my gosh, what is this going to do? And now that I understand it more, and I mean, we use AI for our algorithm. That's about all I know about it, but so they're obviously used in good ways, I think is obviously key. So
you just always want to know where the plug is so you can unplug it.
That's exactly right. So one last thing we can leave here with. So if you had maybe a piece of advice for a borrower or a commercial real estate developer, something like that, where maybe they're just getting in, but they're looking to take a project to a bank or something like that. What are some good things they can do, or things to keep top of mind, and something like that?
Yeah, great question. So I think one is just develop your plan, have a good plan.
Yeah.
Be thoughtful about that. Put enough on paper so that somebody can actually grasp what you're trying to accomplish and how you see it playing out. With the understanding that it almost never plays out exactly like something.
That's right. That's right.
But I think you mentioned earlier about in hard circumstances, but I think it's true on the front as well. Be transparent.
Sure.
Let folks into your situation. If you don't let folks understand what you're really trying to accomplish and what they can do to help, then you're making it hard on yourself ultimately.
That's right.
So tell them what's important to you. Tell them what is going to make something really work well, that makes this situation, really work well. And I think that's a key as well.
Yeah.
I think another important step is to really make sure you're ready to answer the obvious questions.
Sure.
Deals have obvious questions that need to be answered.
Yeah.
And if you don't have answers to those, it probably raises questions about credibility, quite honestly. So maybe even take a couple of other folks before you go for the real pitch and just pitch it to them and see what questions they ask. Tell them, hey, wide open here, just ask questions and see what they come up with. Make sure you've covered your bases. Because that's a really important way to demonstrate clarity and to demonstrate that you've done your homework, because you ultimately should know a lot more about your deal than who you're asking to help.
Yeah, that's right.
So if you don't know more about it and they start asking questions that you don't have answers to, it's going to make them wonder, what else do you not know that you should know?
That's right. No, I think that's great. And Paul, we really appreciate you coming on with us and kind of being our guinea pig, if you will, for the first series of the Gumption Podcast. And we really enjoy working with you guys, and look forward to continued success. And hopefully, the optimism is stays going. So.
Absolutely. Well, thanks, Collin. We appreciate working with the Gumption guys. It's been a good relationship that we've enjoyed building and developing, and we like where it's headed and look forward to doing a lot more with you guys in the future.
Yeah, awesome.
Thank you for listening to the Gumption Podcast with Collin Pettell. If you are a commercial real estate developer, investor, or property owner in need of financing, then we can help you get better loan terms faster. Visit gumption.dev. That's GUMPTION.DEV or email sales@gumption.dev. We look forward to hearing from you. See you next episode.